All right, guys. Pretty intense meeting this morning. Of course, one of the things that we discussed was the Iowa caucus. As to what's getting ready to happen there this week. A lot of clients have been coming at us. If this candidate wins, if this candidate, how do you see things panning out? So, what I would like to do is that there is no doubt this week that's going to be a huge topic, and whose economic policies can impact the markets. At the end of this vlog, why don't we just kind of go around the table and give some thoughts on who you think are the candidates that may either surprise everybody or do well in the Iowa caucuses. Everybody okay with that?
Sounds good. Yeah.
Okay.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at Five Plan Partners.
Welcome to Investors Insights, episode number 147. Today we will be discussing negative interest rates, Bank of Japan. Hey, Iowa, what are you thinking here in terms of candidates, as well as more items that can impact your portfolio? All right. Now, at that same time, I think what we need to talk about is negative interest rates. Bank of Japan on Friday lowered rates. And so now we've got Europe in negative interest rate territory. And we've got Japan in negative interest rate territory. The markets shot up here in this country. Wait a sec. What's happening? Well, in hopes that possibly the Federal Reserve would come back in a few months and actually lower our rates or do something in response that, to Bank of Japan and the European Central Bank. So any thoughts on that?
Yeah, it's interesting kind of on Friday, it clearly became bad news is good news, something we were looking for as of the previous week's vlog. Two data points. Ashley's going to talk in depth about this, but our GDP came out a little low, and then Bank of Japan going at negative 0.10 interest rates because their economy is going so slow. Right. As you can see on this chart that's up on the screen, 23% of the world's GDP now is at negative interest rates.
Wow.
That's not a positive sign. However, the markets shot up on that news. So kind of bad news, good news. Federal Reserve banks around the world or reserve banks are giving out free money. And right. That's not necessarily good for GDP or good for the world economy, but it's clearly, markets are saying it's good for markets. How does that impact your portfolios here? Well, we saw equities markets rally because it looks like that's predicting that lower for longer is what we're going to be seeing in the U.S. U.S. rates staying low when international rates go negative. It's effectively tightening for us, doing the Fed's job for them.
I got you. I think you explained that extremely well. And at the same time, then we have clients calling in saying, hey, the market jumped up. How come we're maybe not moving some of this money into the equity markets faster? Mm-hmm. Part of that has to do with the fact that in a bear market, if we truly are in a bear market, that's where you really sell into the rallies. You don't go in and buy at this point. Everybody agree with me on that?
Absolutely.
So our clients and viewers need to understand some of the strategy that you use within a bear market. Ashley, bring up your points here.
Sure. As you can see on the GDP chart, to Trey's point, in the United States, last week we saw a revision down of ours from fourth quarter. Mm-hmm. Economists had expected an annualized growth within the quarter of about 0.9%. It came in at 0.7%. The difference that you're seeing there is that the energy sector has been down now really about 18 months. And now we're getting to the point where that is beginning to get a little bit of leakage into the performance of other sectors like shipping that would move it, for example. Right. So when you see that, that's why you're seeing that off a little bit. The counter to that, though, which is good for the markets, is that the consumer data came in good again.
Yeah.
The fourth quarter was 2.2% annualized growth in the consumer data. 3.2% increase in disposable income. So the consumer is really trying to work us through this.
Right.
But the problem they're having a little bit is the energy being off. We're thinking, well, why is it even higher than it is? Well, you've got three quick macro trends outside of 2008 that are kind of still giving us some psychological headwinds. One is the fact people are not buying as much on credit as they did. They're scared of that from 2008. The second thing that you're seeing there is that not to the extent of Japan, we have an aging population. And as the population ages, what do? They save more rather than spend. And then finally, the home prices that people also look at for confidence, they are much, much higher. They were in 2008, but still not at pre-crisis levels.
Yeah.
So if you take those three, it's some headwinds.
So put it in our viewers' terms from the standpoint of, if I hear you correctly, even though gasoline prices have come down and everybody would expect, hey, I got more money to spend,
Yes.
if their neighbor is in the energy business and just lost their job down the street.
They're seeing it.
Exactly.
Right.
Or that person who's retired and now they want to downsize and they've got their house up for sale and it's been up for sale for about a year now. And
Not
still
at the price
sold,
they wanted.
And
Yep.
they either sell it at the price they don't want
Yep.
or it's still on the market. They go, you know what? I think I'm just going to hang on to this extra money right
Exactly.
now. So the whole psychological impact on this economy has
Still with us.
it right
Still
there.
with us.
So, all right. Well, Bobby, month of January was just a really fun time, right?
We're excited January is behind us.
Yes.
Yes.
Let's give her a
Yeah,
It's over. It's
first, thank
over.
goodness.
It's the worst January since 2009. The S&P was down 5.1%. Dow was down 5.5%. The NASDAQ was down 7.9%. So it's a bad month. Now, we want to turn positive. This morning, personal incomes rose. The report came out. And that's positive because in the past couple of years, we've had a continuing job increase. Job numbers are looking pretty good, but incomes have stayed stagnant. And so hopefully we need that to improve. You said consumer spending is ticking up some, and so that's positive.
Right.
Now, Friday, we're looking at the jobs report. The jobs report in December was very strong, handily beat expectations, and so we need another good jobs report this Friday, and we'll be looking at that closely.
Okay. Yeah, and that's where we are in terms of positive news, negative news, like you mentioned, Trey, and how does the market go up on negative news or on that positive news? Now, one thing we've got to talk about this. Let's go around the table right quick and just talk about Iowa. So, Ashley, your thoughts on Iowa?
My 1, 2, 3 is Trump, Cruz, Rubio. I think that's how it's going to happen tonight. It's going to be very interesting to see, though.
And then from the Democratic standpoint?
I think Bernie Sanders in an upset
Okay.
over
All
Hillary
right.
Clinton.
Okay.
I think the stuff on the emails is going to catch up with her a little bit.
I got you. Okay, Bobby.
I think Americans are unhappy with what's going on in Washington, and I think Trump meets what they're looking for. And so I think Trump and then Cruz and Rubio tie for second, and I think Hillary. But 40% of Iowans don't decide until the week before, and so it's anybody's game, and so we'll see what happens.
Right.
I'm thinking Republican side, it's going to go Cruz, Trump, and then a surprise out of nowhere. I think Rand Paul's going to come in close third.
Wow. Oh, you got renegading there. There we go.
I think weather may play an impact tonight. There's supposed to be some bad snow, so it'll be who's more dedicated. Some of the Cruz supporters he's got a little better organization. It'll be interesting to see if that works out. And then on the Democratic side, I'm with Ashley there. I think Sanders upsets Hillary.
Okay. All right. I think from the standpoint of the Republican side that Trump, does extremely well. And then I also agree Cruz and Rubio. I just think that three, as to which order they come in, I'm not 100% sure, but I do think that those three will be on the Republican side. And then I do think Bernie will upset Hillary just to send a message. Sometimes Iowa is more about sending a message, Iowa has surprised America before, so we'll see. And let me emphasize that if you like what we have to say on this vlog, take time out to let us know. If you don't like what we have to say, then please feel free to give us that feedback. I'd also like to remind you that you can listen to these Monday market updates as a podcast, which can be found on iTunes and the Stitcher app. We hope you have a great week, and we will keep you updated. Thanks again.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.